You're watching the Morning Brief, brought to you by Invesco. The S&P 500 and the tech-heavy NASDAQ are on a tear this year, both up double digits. The S&P 500 notching its longest win streak in 5 months. But Morgan Stanley's Mike Wilson told Bloomberg that a 10% market correction is likely sometime between now and the election here. Now, we're taking a look more broadly here at the year-to-date charts, but one of the massive things that you have to think about is the different events that are set to take place and could be triggers of that correction, whether it's a sell the news type of event, the Fed maybe starting their Fed rate cutting cycle. And then additionally, of course, you have the event of the election itself. But leading up to that, there's a larger question mark looming for the Democratic Party of whether or not the current president, who is the front runner for its party and convention going into the convention, is set to potentially pull back or pull out of the race as well.
Yeah, I think longtime bear Mike Wilson's back. He had tempered his expectations most recently on the heels of that massive rally that we have seen play out in the equities markets over the last couple of months here. But what he's essentially saying that the market needs to brace for is some choppiness leading up to the election, saying that the third quarter is going to be quote unquote choppy. And he goes on to list the election as some of those reasons. A pullback, though, he's saying may offer some opportunities. He doesn't look at valuations as exciting right now. And he also went on to say, quote unquote, your likelihood of upside from now until year end is very low, much lower than normal. And he placed the odds of the stock prices actually closing higher from current levels, and now at just 20 to 25%. So again, just striking a tone that we have heard, maybe just in terms of that cautionary tone that we've heard from some on the street. And maybe they're not saying that the pullback will be to the extent of 10%, but they raised some concern about the concentration that we've seen play out in the markets, the fact that it hasn't exactly, we haven't seen a wider breadth up until this point. And then some of that momentum seems to be maybe leaving the market here when you take a look at some of those larger cap tech names, some of that AI excitement. So there has been alarms, or maybe some red flags that have been raised on Wall Street over the last several weeks.
I really enjoyed hearing what Liz Ann Saunders was reminding us of earlier in the show as she was talking about some of the psychological element of the trading that we might see really come into the forefront. And then that is really looking at some of the profit taking that could come forward in some of the sectors that have been extremely overcrowded, or the trades that have been extremely overcrowded. And then now what a rotation or pulling some chips off the table, or at least trimming positions, could mean as related to a correction. Because if you did see those that trimming of positions happen in a larger wave, then that's the volatility you're looking for on one instance. And then it's people sitting on, or investors sitting on, some of that cash to try and decide where they would deploy it next, and how long they sit on that cash could eventually get us to what Mike Wilson is talking about in a 10% market correction.